Good morning, everyone. Welcome back to Morning Kappa. Right, so if you look at the S&P 500, well, it finished higher on Wednesday session, raising by 0.78 percent to close at 6869.49 points. So I think after a scary start of the week this week, right, I think the market staged a broad comeback, as investors look past the immediate war panic, encouraged by the reports of the secret diplomatic outreach and strong US job reports this week. So I think expect a bullish but cautious opening in today's session as the market attempts to reclaim its new high while keeping a close eye at the stability of the oil price. So if you look at the charts right now, the rebound from this 6800 points remain firm. And if it holds, this might send the DAX higher towards this 6950 resistance level. Okay, so for our US trading stocks that we have published, we have Intuit and Stockware INTU. So the stock experienced a breakout at $4 to $5 level. Now we can expect the stock to travel towards $470 dollar level on a strong momentum once again, followed by the next resistance at $515 level. Now, if the counter to reverse, do watch out for the 380 level for the immediate support, as this could trend lower. Also, we have Workday, so code WDAY. So looking at the charts right now, the counter charted a higher high market structure, breaching this above $140 level. So if the stock to climb up higher, we could see that it might travel higher towards this $155 level, together with the second resistance is at $170 level. Now, if the stock slides lower below this 125 level, this might shift to a bearish structure. Okay, so for the China A50 futures, well, it dropped lower on Wednesday session or yesterday session to breach below this 200-day moving average or the SMA line, falling roughly around 1.9% to settle at 14,444 points. As the escalating war has wiped out the global risk appetite. So I think the market traded defensively as investors are worried about the energy price shock that will hurt the manufacturing sector, as that some of them are using the energy to cook the machine up, right? Especially after the new data showed that the factory activity contracted for the second straight month in February. So I think for the current session, we do expect a cautious trading session as all eyes turn to the Beijing for the official 2026 growth target and a new stimulus plan. So technically, if you are trading A50, right, China A50 futures, I think negative trading bias should be seen after the index has formed a double top formation recently, which is a reversal pattern formation. Well, for the WTI crude oil futures will continue to climb higher on Wednesday session to settle at 76.1 dollar per barrel. So I think while the market was whipsawed, by the conflicting report of secret peace talk, I think prices have ultimately stayed higher because of the Strait of Hormuz remains effectively closed. And if you recall, news reported that Iraqi production has been slashed by 1.5 million barrel per day. So do expect a highly volatile trading session for today as traders weigh a surprise jump in the US inventories against the reality of the ongoing war supply disruption. So however, I think that this whole war story is just a sentiment play. Eventually, it will come down gradually in terms of pricing. But yeah, I mean, for now, we still hold our bullish stance, and traders should take benefit out of it, right? So looking at the Malaysia market, the KLCI and also the FKLI, well, both finished lower on Wednesday session with the benchmark index, dropping by 13.73 points, or around 0.8%, to close at 69.822 points. I mean, it's the first time slipping below the 1,007 mark since, I think, since January, right? So yeah, the market traded broadly lower as the global risk of sentiment intensified, following the US threat uh, of the trade embargo on the Spain, right, sparking fears that the war conflict could be widened into larger trade crisis. Well, in my view, um, I think, yeah, I do expect for a defensive opening in today's session as investors continue to pull back from the equities in favor of the things like gold, safe haven asset lah. Okay, so yeah, for the FKLI, I think as the market is now experiencing pullback and has hit our stop loss recently, so we hold our negative trading bias until a bullish market appears to shift our position out. So for now, support is looking firm at 1660 points, 1660, and also 1615 points. All right. Again, if you look at the overall market, this heat map right here, I think the decline was largely driven by a trend in our banking or the financial heavyweights, right? With Maybank, Public Bank, and also the CIMB seeing a significant pullback as the investors adopt more cautious stance recently. I think while the broader market was mostly in Red Sea, right? I think we saw some impressive resilience in the uh, energy uh, energy sector. Well, of course, coming from the war sentiment story. If you see here, Heng Yuan was the standout performer, surging well over 14% yesterday. Hibiscus also posted solid gains. I mean, yeah, we have shared to you, I mean, we recently have shared to you all on the outlook of the hibiscus, and well, it went over what we expected lah. So congrats. And I think outside of the energy sector, most of the sector also struggle, including utilities, tech, as traders look for clearer leads from the global stage. I think the overall market breadth was weak, with the declining outpacing the gainers in yesterday's uh, uh, session, right? So, looking at our Malaysia trading stock, so we have Press Metal today, and I mean, the stock has formed a breakout formation higher at 7 ringgit and 35 cent level on a strong volume. So with that, we expect the momentum to keep bullish, and the stock able to propel higher to test this 7 ringgit and 70 cent. Second resistance is at 8 ringgit and 5 cent level. So if the stock to clear below the 7 ringgit, this could reverse the course and trend lower. So next we have LHI, or Leong Hub, the stock fit company, right? Uh, uh, yeah, I think that the stock is also experiencing pending breakout at this 80 cent level. So if the stock remain bullish, we can expect that the price to reach 86 cent. Together with 92 cent in the coming session with a high volume. So for now, we keep an eye at the 74 cent support for any attempt of reversal. Right, so we have one breakout stocks for Press Metal, press metal, and also one pending breakout stocks for Leong Hub International or LHI. And lastly, for the FCPO, well, it finished lower on the Wednesday session with the contract, slipping 7 ringgit to close at 4179 per ton. So this has snapped the 3-session winning streak as the investors lock in profit following the the war story lah. So I think while the conflict continues and the support the prices, I think the market was pressured by dismal export data showing that a drop in shipment in February, like what Vincent have mentioned recently, alongside with a weaker performance in the rival edible oil as well from China and also the US. So I believe that the commodity may trend in a range bound today, or sideways today, as traders still digesting the weak physical demand against the high risk of oil supply shock. Right, and lastly, for our campaign, so the more you trade, the higher chance for you to win the Tesla and also the iPhone 17. Right, so I'll stop here and pass you to the next presenter. Thanks, everyone, and happy trading.
All right. Good morning, everyone. So we have a ground checks note today on Binastra. Let me just share my screen. All right. So this contract is related to Binastra's ongoing data center project in Cyberjaya for MYT DC3, where it is also for Ames Group. So initially, the structural or core and shell works was awarded to Binastra for this data center back in February last year for 250 million ringgit. And it was already slated to be completed in December of last year. And during our first visit, we already saw, which was probably in the 4th or 6th month of the project, we already saw 2 or 3 stories already being completed, which is very quick. And based on our latest checks as of late of last year, we saw that there has been a lot of progress whereby the structure itself has already been fully. So what happened next is that in November of last year, when they were ending the core and shell works for this project, the client awarded them with an M&E fit out works worth about 188 million ringgit. So now, which is slated to be completed within 4 months. So maybe in March or April, that particular package should be done. So we are very we take comfort that Binastra, despite it being not as big as Suncon, Gamuda, or even IGM, they are still able to complete data center projects in a very quick and timely manner. And they have already secured 1.9 billion worth of total data center jobs so far. And in terms of their balance order book, we estimate about 10 to 15% out of their 7 billion outstanding order book to come from data center projects. So in February, they also secured their latest data center job, which is for Exim in Cheras for 500 million ringgit. So moving forward, we think that if there were to be any DC projects which are in a way relatively smaller with a capacity of between 10 to 20 megawatts, that could be something of Binastra's interest. And even going beyond data centers, we think that they have a lot of order book in Johor, maybe somewhere between 3 billion ringgit plus. So that should also be an earnings driver the next 1 to 2 years. And even focusing on Johor also, their main client Exim also has some upcoming developments which we could expect to potentially yield about 1.5 billion worth of potential contract value for for Binastra to bid for. So all in, we maintain buy with an unchanged target price of 2 ringgit and 72 cents for Binastra. Uh, we continue liking the stock for its steady pace of job wins and also uh, steady earnings growth. So that's all from me, everyone. Thank you for dialing in today for RGB Morning Kappa at 8. We will see you tomorrow at the same time and same place. Have a great day ahead. Bye bye.